Hello, my name is Bob Porfirio. I'm president of Wealth Preservation Assets, a firm established to bring you, the public, the information you need to get by in these days of economic uncertainty. I might add, however, that we have no political agenda. Our purpose is singularly educational, to help you preserve your assets, not sway your vote. I should also say that we're sponsored by Pacific Coin Exchange, a premier dealer in rare coins and precious metals, so don't be surprised to see little blurbs pop up throughout the webcast giving you their contact information. This morning I'm privileged to have with me Mr. Thomas Fisher. He's an executive with Jyske Bank, centered in Denmark, and Jyske Global Asset Management, and a respected authority in the fields of international finance and currency trading. Before we get started, because I have a lot of questions for you, I'd like you to say a little bit about yourself and your firm.
Sure. Thanks for inviting me, Bob. I've been in the financial industry since 1975, and in 1978 I became a currency trader, and I was trading currencies for 22 years until 2000 as a professional, both as a broker and as a dealer in London, Frankfurt, Düsseldorf and Copenhagen. And then in 2000 I joined Jyske Bank in Copenhagen. And in 2008 Jyske Bank established what's called JGAM, Jyske Global Asset Management. It's a company registered with the SEC, the Danish financial authorities, and we service US clients only. So Americans that wants to go offshore in a safe environment can come to JGAM, and we offer managed portfolios for clients.
You mentioned a word that's sometimes anathema here in America, and that's bank. In America, the banks have something of a less than respected position.
Yeah.
How is Jyske Bank in comparison, say, with other banks in Europe or in Denmark?
Jyske Bank is the second largest Danish bank. And when they did the European stress test of the banks, Jyske Bank actually came out as number 6 or 7 out of the 91 banks they stress tested. So it's a very safe, conservative bank, and as I said, it had a high scoring in the stress test.
You know, I've got a whole lot of questions for you, but I think I'm going to start by putting you on the spot.
Okay.
Get out your crystal ball, because I want to get from you your thoughts on the global economy, say short term and long term.
Yeah. Well, we try and we look at the crystal ball on a regular basis at JGAM, and we think the global economy is definitely having problems. The Eurozone, a lot of debt issues. In the US, you have the so-called fiscal cliff approaching. And China, growth is falling in China. It's still good growth, around 8%, but it's down from 10 or 11%. So there's a lot of stress in the system, which is why the central banks are pumping in this enormous amount of liquidity. Unfortunately, it doesn't go to where it should go. It stays at the banks. So it doesn't help you, it doesn't help me, and consumers worldwide are basically trying to shore up their finances, and there's simply not enough. We're not consuming enough.
Yeah.
We're not. You know, you save, I save. You know, for a rainy day.
So we're saving, but then the banks and the corporations are saving, right?
Yes, and don't forget the banks actually had a lot of issues after the Lehman Brothers in 2008. Greece, Italy, Portugal, Ireland. So a lot of banks are having problems, and they had to shore up their own finances, and this is basically what we've been seeing. ECB now has actually joined the Fed with quantitative easing, and someone actually told me the quantitative easing that is going on here in the US is taking on sort of like the Rocky movie. It's going to be 5, 4, 5, 6, 7, 8, and so forth. So there will be a lot more quantitative
here in the US.
Yeah.
Let's look a little bit closer at each major sphere of economic activity in the world. Let's look first at Europe.
Yeah.
What do you think the future of the euro is going to be, and do you think the recent actions of the European Central Bank in terms of buying bonds of the weaker nations, is that going to be effective or not?
I think it's going to be effective because the ECB basically said we're going to buy unlimited amounts. They're going to set up a bank and they are going to help as much as possible. I do not think the euro is going to fall. There may be countries that will leave the euro, and I do actually believe that Greece might leave the euro within the next couple of years. But that's not necessarily a bad thing for the euro, because if the weak countries leave the euro, that would make it even a stronger currency. The problem in Europe is we only have monetary policies. It's one policy for all the countries, all 17 Eurozone countries. And let me just stress here now, Denmark is not part of the Eurozone.
I was going to bring that up.
Denmark is in the EU, but we're not in the Eurozone. We have our own currency. But you have 17 countries, and in Greece and Spain, Italy, they really need low interest rates. It's difficult to have one interest rate for all the 17 countries when the countries are so different. The Germans, as you know, they hate inflation. They saw the hyperinflation in 1923, where the German mark against the US dollar, from 1913, it was 4 German marks to $1. In 1923, it took 4 trillion marks to $1. And that's what the Germans, they never forget that. And they are very tough on inflation. And whereas the Fed has a dual, they're both looking for the growth and for inflation. ECB basically just have one task, to keep inflation under control.
I see.
But this is what the Germans say now, with what the ECB is doing now, pumping money into the system. That's not fighting inflation. So it's pretty tough.
So the Germans are sort of Europe's branch of the conservative economists over here, who say QE3, QE1, QE2 is going to, in the long run, cause inflation. In other words, they're the ones that are looking more towards austerity and debt reduction.
Than I mean, this is what we're experiencing now is uncharted territory. We don't know what's going to happen down the road, because with so much money pumped into the system, you know, my best bet is we will see inflation. But as long as you don't spend any money, I don't spend any money, the companies are not spending money. I mean, they're laying off people, they're cutting down where they can, and just hoarding cash. Then obviously there will be no inflation.
And that's what's suppressing the inflation figures now.
And in the US and Europe, I mean, we look at Japan and say, okay, we don't want to end up like Japan. I mean, they have been for 22, 23 years stuck in basically deflation. And in economical terms, deflation is actually worse than inflation, because then you're not going to go out and buy anything if you know in a week from now it's going to be cheaper.
Yeah. Well, let's turn our attention for a moment to America now. You mentioned that word that more pundits here are using, falling off the fiscal cliff. I know they use that to refer to the problem of Congress's inability, seemingly, to deal with either the national debt or the budget, and that they keep pushing this forward, and you know, sooner or later something's got to happen, or we revert to those stringent standards that have been set if Congress can't make up its mind. First of all, what is Europe that concerned with what's happening here in terms of this congressional deadlock?
I think Europe has enough on its own plate to worry about the US. But I guess, having said that, yes, we do, because from the outside, it looks as if American politics have become more and more polarized over the last 10 years, and Democrats and Republicans don't even speak to each other. I was at a seminar, and one of the speakers was into U.S. politics, and he said one of the reasons is back in the old days, the politicians actually lived in Washington, D.C. or in the area. They met for dinner, had a drink. Now they work in D.C. and go home, and they have no personal relationships anymore, so it becomes very polarized.
Yeah, and even more so during times of election. In other words, they've moved their residence to whatever their home state or territory is, and during times of election they're gone, and they leave on the weekends. So the socializing, I guess, is gone. That rapport then is no longer there.
And then, I mean, they are in nature short-termists, the politicians, because they have to get re-elected. So they don't want to do anything that doesn't get them re-elected, and that's why it's the issues you have here in the U.S. with the debt is a long-term issue, but you have short-termists looking at that long-term issue, not doing anything about it. And we have the same issues. But if you take the Eurozone as one, if you took the 17 countries as one nation, it's almost the size or a little bigger than the U.S. We actually have less debt than the U.S. I mean, we're actually better off. But when you hear American news media, it always sounds as if Europe is going up in flames.
Yes, we do get that impression. Yeah,
that might be, in times of bad times, it's easier to point at somebody else.
Let's turn our attention now to Asia. Again, economists and pundits here in America have looked towards the slowdown in China, which has been the world's the driver of the global system, and then also India, as indicative of perhaps pushing us more into a global recession. What would be your comments on that? Do you feel we're headed for a further slowdown?
I think the Chinese government will do whatever it takes not to go into a slowdown, because the last thing the Chinese government wants is civil unrest. So they want to keep people fairly happy.
Yeah.
And it does, as far as I remember, it takes about a growth at around 8% to keep the economy growing. So I think they have a change of leadership in China this year. It's actually been postponed from October to November because they had this problem with Bo Xilai, where his wife killed an English businessman. So that probably postponed it a little bit. So it will happen in November. But I think they can put on a lot of they've put on a lot of projects in China. I mean, they actually almost saved the economy in 2008 because they actually pumped up everything. But
well, of course, China has a capitalistic system, but a centralized communist government that can direct it, so they can do things, let's say, more effectively than we can in the rest of the West.
They call them government-owned entities, I think, GOEs in China, and they need you as well, because they need consumers. They need someone to come and buy their stuff.
As does India.
As does India.
India has less regimented economy, unfortunately.
And the thing about India seems always to get forgotten in this, because China is the manufacturer of the world. But India is almost the same population, slightly less, I think, but they all speak English, which they don't do in China. So, but I see long-term, China must be the place to be long-term. I mean, they have, I think they have projected 500 million middle-class people moving into the middle classes over the next 20 years. That's a lot. That's more than here in the U.S.
Yeah, and we know what the growth of the middle class did in the U.S. in terms of driving our economy, so that would be even more so in China. Well, let's turn to the third major power in Asia, and that would be Japan. There's been a lot of attention here in America paid to Japan, not just because of our special relationship with Japan, but because Japan was such a growth country in the 1970s, 1980s, and 1990s, and now for the past 10 years, as you mentioned, they've been seemingly able to pull out of their recession, and the steps that they've taken in terms of easing credit and trying to devalue the yen and building up a national debt now that's over 200% of their gross domestic product hasn't seemed, at least, to be effective. The conservative economists here in America are warning us Americans that we're going down that same path with all this QE 1, 2, 3. What do you feel about about what the future of Japan is and how it relates to Americans?
Well, Japan is, as one of my good friends, John Malden, the newsletter writer, always says, Japan is a bug in search of a windshield. Because they have, but I don't totally, it has to be taken with a, But Japan, yes, they had 200% debt to GDP, but most of it is owned by themselves. So it's no foreigners, it's the Japanese themselves. And the Japanese is one of the wealthiest countries. They have a high wealth individually. So they could basically just pay it off themselves, more or less, where a lot of the debt that you have in the U.S. is owned by foreigners.
That's right.
China
and growing.
China has about 12 or 13% of all the treasuries now in their reserves. So Japan, but the problem with Japan, I think, is you have the Bank of Japan, and then you have the Ministry of Finance, and they don't seem to agree. You know, the Bank of Japan says one thing, and then you know the Ministry.
Sort of like the Democrats and Republicans.
So they never really, and they did the mistake also that what Roosevelt did back in the 30s. You know, they put liquidity into the system, and then they shorted up too early, so they double dipped, and the yen is actually very strong. I mean, it's approaching the all-time high against the US dollar, which is around 75, but we're trading at 78 yen to the dollar at the moment. And that's because it's a safe haven. So I think Japan, I mean, look what happened with the tsunami, and 18 months later.
Major cataclysm, and they're back.
And they're back.
Well, you mentioned one difference between their debt and our debt, namely that the Japanese hold their own debt. We don't so much here, although there's been some talk, I don't know if you've heard this, that the U.S. government would like to take over the various retirements, the SEP IRA, the Roth, and so on. And once having done that, wouldn't it be a simple move then to simply buy T-bills and put that debt back in the hands of Americans, whether they wanted it or not?
I've heard the argument, and I've heard people say that that your administration might say, okay, we want to protect you from the dangerous stock market, and now, from now on, 50% of your investments in your IRAs and whatever has to be in the U.S. Treasuries. I've heard that argument. And, you know, it could happen. You know, they need someone to buy the... At the moment, what's happening is they issue treasuries and you buy them yourselves. I mean, the Fed buys them themselves.
Fed buys them, yes.
So the Fed balance sheet is exploding, which is dangerous.
We better talk about that at another session. I want to thank you for your time, and we hope you come again.
Pleasure. Thanks very much, Bob.
We hope to continue providing you with information vital to your economic security in the form of these ongoing webcasts. You can get even more information on the website of Pacific Coin Exchange in the form of blogs and e-newsletters. Thanks for spending some time with us.